Okay, everybody, here we are again, you and me together at last on this Tuesday, November 20th, 2018. As usual, I have a lot I want to talk about, and I almost don't know where to start. Actually, let's start off with the basics here. Unless you live under a rock, you got to see another sell-off here in the stock market. The Dow Jones Industrial Average finished down 553 points. At one point today, the Dow Jones Industrial Average was down to 648 points. If you recall, in the video that I did this morning, I said at the time I had done that the Dow Jones Industrial Average was down around 500 points, and I was not convinced that the selling was over. Well, as you can see, we did drop substantially from that point. However, market was volatile again all over the place today. Traders jockeying for position. It's kind of interesting to watch. You literally have to admit that no matter what. Now, I want to cover a few things with you. Some of this I covered in the video I did earlier, but I want to put a little more light on this and talk about a couple of other things too. So, what did we witness? If you recall this morning, a huge amount of cash piling into the debt market as a safety play. Some of this might have been to prop up the stock market as well, but I really believe this was legitimate fear. And how do we know that? Because the dollar, big gain today as stocks fell. So with that said, we need to keep our eye on a few things. And of course you understand how important the bond market is. But again, this is where there's a little cause for concern with regard to the bond market. And let's talk about that here. All right, so we understand a lot of cash moving into the bond market. It's kind of funny. If you were watching CNBC today, they talked a lot about the 10-year yield. All of you, you're way ahead of those guys and girls. You know how important it is. Now, they're spinning it, and I want to clarify their spin. What they're saying here is the bond market is stable. Sounds like Greg Mannarino, right? However, they're wrong, and I want to tell you why they're wrong. It seems like it's stable, right? But it's not. And there's the issue I want to talk about. So what the COD is trying to tell you is that you really shouldn't be overly worried about the stock market. I kind of agree right there, okay, a little bit, because the 10-year yield is stable. Now, stable means we're not getting too much movement. Now, that's not really true. The 10-year yield has been dropping. I would not call that stable. You understand? So I believe there is some instability here in the bond market, which means to me, okay, we could see a quick reversal in the 10-year yield. Now, as all of you are keenly aware, this guy here, please don't take this the wrong way again. From a trading standpoint, I don't care where the market goes. From a people standpoint, of course I do. I don't want to see anybody lose cash in this market. But again, if you've been on the long end of this market here, 401k plan, whatever it's been, you've been in an environment that's not real and distorted, and you've also been very happy to accept the gains from this twisted, distorted market. You have to understand that what we're seeing now is the market trying to figure out what's going on here in an environment where world central banks have gone berserk. I mean, we're in bizarro world. We've never seen this before. You all know that. So, with that said, again, I don't care about the pullbacks in the market, these corrections in the market from a trading standpoint. I got to be careful what I say, it seems. But the 10-year yield, despite what the COD is trying to tell you, is not stable. We've been seeing it go lower. My concern, and this is what I've been explaining since time immemorial, is a sell-off a rapid, uncontrolled sell-off in the bond market, which has the potential to happen every day. It's really the truth, and I think that potential gets greater every day that we exist in a fake environment. That's the truth. This is, again, where no man or woman has gone before. So, whenever there's turmoil in the market, there's always the knee-jerk into safety, if you want to call it that. If you notice, gold and silver did fall today, which are real safe assets. But no. You can't be there. You understand? They don't want you in that. You know, it's an incredible situation. Okay, whatever. You know that. But when you get a knee jerk like this into the dollar, knee jerk into the bond market, more cash that pours into the bond market, the lower the yield goes. And we're concerned about the 10-year, you and me. That's the benchmark. You understand? So I think the cards got this all wrong. The bond market is not stable. We're seeing it drop. And I think because of that drop, the potential for this to spring back the other way kind of rapidly exists. If that happens, people, mark my words, because this is all I'm concerned about. Again, I don't care about pullbacks, I don't care about corrections. If we see a snapback here of the 10-year yield in this environment, run for the hills. Run for the hills. Okay, that's the truth. That's going to be the real sign that there's big, huge issues coming down the pike here with regard to the stock market. So anyway, with that said, I want you to think about what I've explained to you. Don't let the COD or anyone else mislead you. Let's talk about another misleading story that's coming out today by Goldman Sachs. You know, the lovely Goldman Sachs. They want you to now be in cash. This is what Goldman Sachs is saying. Now, I know you're not that dumb. So when you hear something like that coming from Goldman Sachs, you know you need to be doing the polar opposite of what they're saying. This could not be more clear to me. It should not be more clear to you. So what that tells me is something is lurking about. They want you in cash. There's a reason for it. Okay? And we'll see how that plays out. With regard to the stock market, you know exactly what to be looking for here. With regard to that 10-year yield, snapping back, if rates spike in an uncontrolled fashion, what we witnessed in the stock market over the past couple of days is going to seem like a walk in the park. A walk in the park. Okay? So what would happen? Let's just put up a hypothetical here. If bonds sell off rapidly, well, who's going to start buying? Well, it's going to be the Federal Reserve stepping in, printing cash out of thin air, trying to stop the bleeding. What's that going to do? It's going to melt the currency, which Goldman Sachs wants you to be in. You understand? So just laugh. Call up Goldman Sachs. You can find their number like on Google, and just laugh into the phone. Just laugh your rear end off from here to Kingdom Come. That's the truth. All right, so let's talk about a couple of other things. I know this is getting kind of long-winded. Bitcoin, cryptocurrencies under a lot of pressure here. And I'm hearing from more people regarding Bitcoin and their 401ks all day long. I've answered some of you out here. If you're one that I did get a chance to respond to, please share what I said in this comment section here. But it's pretty straightforward. Look, I've explained to all of you for the longest time that I do not hold cryptocurrencies anymore. I've lost my mojo with regard to valuing them. I've been as honest and candid as I possibly can. That should have put a perspective on this for you a long time ago, how I'm doing what I'm doing or not doing with cryptocurrencies. I'm not touching this stuff. There's no way in the world I would be touching this stuff right now. Okay, that I can tell you. With regard to the stock market, okay, please don't panic yet. Okay? Don't panic yet. You will panic, and I mean that. The time for panic, very simply, I've already outlined it for you, is when we get an uncontrolled sell-off. in the bond market. When cash starts leaving the bond market, rates will spike. And this unstable bond market, it's unstable, okay? Yeah, rates are low and moving lower, but that's what they're doing. It's going lower, 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 lower. That's not stable to me. Stable is we're staying in kind of a nice tight range. This is worrisome a little bit. So let's keep our eye on all this. It's very simple. It's very straightforward. All right, people, look. This video right here will be the last one I do for this entire week. This is kind of like a Friday for me. I have family in town. I'm going to disconnect myself from these markets for a few days. I do have multiple open positions. I posted most of them on my website already. I entered another one today, 2 positions today, Pfizer, Goldman Sachs, credit spreads, Goldman Sachs. I will post them later, all right, when I have a little more time. So again, you're not going to see this guy for a while, but like I said, I'm going to leave you off like on a Friday, but all of you have the happiest Thanksgiving possible. Enjoy each other, love each other, care about each other, be charitable. Forget this, all right? This is going to do what it's going to do no matter what. What's important here is our relationships with each other around the world. That's really the truth in my book. And you know what? You know the truth when you hear it, so I hope that made sense to you. Anyway, much love from the heart, from this guy sitting right here. I will see all of you again Sunday. That's going to be the next time you're going to see me. I'm sure some of you are happy to not see me, but I'm going to miss all of you. I'm serious. I'll see you Sunday. That's it. Over and lovely out.